Semiconductor stock, or NVTS, based on its pivot to AI and EVs.
A really interesting thesis.
It is. I can see the moon mission angle from that 150 low to where it is now. But let's jump right into the structure, because I think that's where the first issue is.
I agree. We need to look at how this information is laid out.
The presentation format right now actually minimizes the dramatic nature of this Navitas 2.0 pivot. It gets buried inside a ton of technical data.
Buried is the right word. You've got everything just condensed into one massive paragraph.
Everything, the 400% recovery, the GlobalFoundries deal, all the support and resistance points.
And the risk factors, all in one place. It overwhelms the reader. And that core story, the shift from mobile chargers to high-power AI and EV, it just gets lost.
So the suggestion is to segment the analysis. You have to distinguish the long-term fundamental growth story from the shorter-term technical drivers.
Exactly. You could have one section that focuses exclusively on the Navitas 2.0 pivot.
Right, just the AI and EV story, the institutional buying.
And then, in a totally separate section, you introduce the moon mission momentum play. That's where you discuss the support around $7, the neutral RSI, and that potential breakout through the $8.50 or $9 sound barrier.
That separation is so important, and it actually leads directly into our second point, which is about focus.
We need to explicitly clarify the primary driver of this whole investment thesis. I mean, what is it really? Is the conviction coming from that fundamental business shift, or is it all about a potential short squeeze?
Because the report puts a lot of emphasis on the short interest. You know, that 20 to 29% short, the days to cover. It's placed right alongside the core business narrative.
And when you blend those two, it just creates ambiguity. Is this a long-term hold or a short-term trade? The reader isn't sure.
So the suggestion here is to hierarchy the drivers. Make it crystal clear that the core value proposition, the GaN efficiency, the AI server adoption, that's the foundation.
Yes. And the short interest is positioned as a powerful accelerant. It's not an equal part of the thesis.
Right. So the stock isn't just a trading vehicle for a squeeze. It's a structural transformation that just happens to have this incredible leverage built into it.
Precisely. You frame the short squeeze as the mechanism that could fuel that vertical spike up to, say, $12 or $15 if the market gets confirmation of those big AI wins.
Makes sense.
And you really need to emphasize that the GlobalFoundries partnership for U.S. manufacturing isn't just a headline. It's a core structural strength, not just a short-term catalyst.
Okay, so to recap this critique of the NVTS thesis, the actionable advice is really about two things. First, clearly separate that foundational growth story from the short-term momentum indicators, just for clarity.
And second, establish that hierarchy. The long-term value creation is the solid base, and that high short interest is the accelerator that could just punch it through that 850 sound barrier. It's strong material. You just have to give that business pivot the spotlight it deserves.
We invite you to implement these changes and resubmit your revised market report for another critique.